Hello YouTube, it's Christopher here from Cars Unlocked. Today I'm going to be discussing auto loans and your credit score, what you need to know before financing a vehicle. So if you've checked out my About section on my channel, most of you will know that I'm a special finance manager within the Canadian automotive industry. So all day, every day, I do loans and financing and the sale of vehicles. If you want to see more, don't forget to hit that subscribe button. I'm doing a little different video today discussing the auto loans, but let me know what you think in the comment section below and subscribe to my channel for more videos. So let's get started. The sources I've used for this information come right from the Equifax and TransUnion websites, which I'll post here for your reference. I also have many years in the automotive finance industry, so I'm going to pass all my knowledge on to you today. At the end of the video, we'll be discussing the pros and cons of buying a vehicle with a loan and how it can build your credit score. Let's get started with what you need to know before you shop for an auto loan. The first thing I would recommend knowing is your own personal credit score. So a lot of the websites, the two major credit bureaus in Canada, Equifax and TransUnion, will give you your credit report for free. It's important to know what makes up your credit report. If you want me to do a video on just credit alone, I can, but today we're focusing on the automotive side and getting an auto loan. Things you should consider, there's many factors that come in to your credit score, which I'm going to put right up here, like your payment history, your used credit versus your open credit. So what credit you have available, your credit history, your public records, as well as your number of inquiries. Another thing you consider is your monthly budget for a vehicle. If you're applying for an auto loan or any loan in general, you should already have an idea of how much you can afford a month, if you can put any money down. And don't forget, with auto loans, you also need to factor in your insurance, maybe your annual or biannual oil changes, and any other ownership expenses. Insurance and monthly budget is really important to know before you apply for a loan. Another thing to consider when you apply is what type of inquiry are you applying. So if you apply at a dealership and they submit you off to automotive lenders, some of the major ones here, Scotiabank, TD, RBC, Desjardins, Bank of Montreal here in Canada, that's considered a hard inquiry. Those inquiries will show up on your credit for up to 36 months. One misconception that we've seen in Canada is people think that by applying to dealership, they're going to get a hard inquiry each time. That is not the case. The credit bureaus recognize that people are going to shop for vehicles. And if you apply within 14 to 30 days for a vehicle, they will only give you one hard hit on your credit score, and it should go back up within a matter of weeks, maybe a month max. However, you'll see all those inquiries from each dealership and each lender on your bureau, and it will really look negative when people are reviewing your credit. You also going to need to consider, is it the best time to get a loan? So for example, do you have a very high amount of credit card debt? If you have 3 or 4 maxed out credit cards, it might not be the best time to apply for a loan, because you could be using that money to pay off those credit cards, which are significantly high interest, and that might allow you to get a better loan in the future. Also need to consider, do you absolutely need the vehicle? If the vehicle is not really a need and you're currently driving a vehicle with no monthly payments, I call those the golden years, and you might as well ride out the time you have with no monthly payments until the vehicle is an absolute need. So what's the automotive rates for a vehicle here in Canada? Most manufacturers offer the very low rates that you see advertised on TV, the 0 to 0.9%, 1% interest for new car purchases. Those are buy downs from the manufacturer who buy the bank, or they have their own bank to offer incentives to you, the consumer, to get those 0% interest rates. You need to consider what your credit score is. If you have a very good or an excellent credit score, then congratulations, you can go into the dealership, achieve those low 0% rates, and go away with a nice loan for your vehicle. If you are in maybe the poor, good, or very poor credit tier, you're gonna have a hard time achieving those low rates, and most dealerships will decline you. So what you should do at that time? What I would recommend is making sure the vehicle is an absolute need before you get into a high interest loan. Like I said before, the vehicle needs to be an absolute need because you're gonna be taking away from your budget to pay off your debt, which will essentially build your credit score, paying down your debts. You can consider, do you have any money down towards the loan? Can you purchase a reliable vehicle for this cash that you have on hand? Generally, it's going to range anywhere from at least $4,000 to $5,000. If you decide that you really must have a loan, the ways you should go about achieving the loan can vary. However, I would recommend speaking to your financial institution or going directly to the dealer who has someone like me, where we do it in the reverse step, where before we look at vehicles, we're going to assess your credit, get you pre-approved for the loan, tell you what the interest rate will be, tell you what the payments will be, and then we can show you vehicles. That's more the best way to do it. I don't recommend applying online. There's a ton of different websites where you can apply online where they say get approved for credit today, and they will take all your information and send you to the closest dealership. The reason why I don't recommend that is because all those companies do is farm your information, send them to the closest dealership, and then the dealership calls you. You might as well walk into the closest dealership of your choice that you're comfortable going to, that might have some positive customer reviews, because they're going to treat you the best. If you leave it up to any dealership to call you, you might not know who you're dealing with, and it's much easier to deal with in person than over the phone. Another reason why you shouldn't apply to all these car loan places online is you don't know who they're sending any of your information in. Some of them ask for your social insurance number, all your personal information. They could send you to 4 different dealerships. Those 4 dealerships might submit you off to 3 or 4 different lenders for a car loan, and you'll have numerous inquiries on your credit bureau within a matter of a couple days. I've seen a lot of credit bureaus where people apply online to all different places, and they have so many inquiries, 15 to 20 different inquiries from different dealerships, and they don't even know that they've been submitted at those dealerships. You should also consider if you can wait and tough it out for another 6 months to a year to build your credit up, which will allow you to get a lower interest rate at that time, or can you tough it out and pay a bit more of your debt down to achieve a lower interest rate. For example, if you go into a dealership and apply for a car loan and you have 4 maxed out credit cards, they're going to consider your credit utilization very, very high, your debt to service ratio very, very high, and you're going to be considered higher risk. I would recommend paying down your credit cards first. Do not apply for a loan unless your credit cards are at maybe 10 to 20% max utilization. You also need to consider if you have negative equity coming from your current car loan. So do you still owe money on your current car, and is that more than what your vehicle is worth? If that is the case, me being Dutch, I wouldn't recommend going that option, because you're basically going to be rolling the difference between what your car is worth and what you owe on the loan to the next vehicle. People do it all the time, and it can result in very high payments and very, very high loans. Remember, if a dealership presents you a low monthly payment, it could be stretched out for up to 7 to 8 years, and it could be a very, very high price loan, but it will have a nice low payment that attracts you. Let's talk about cosigners, because cosigners are something that really, really frustrates me, that a lot of people don't understand how it actually works when you're cosigning for an auto loan. Cosigner is basically like being 50-50 purchaser for the vehicle. Yes, the ownership might be in one person's name, but you're both equally responsible for the loan in a 50-50 stretch. So the cosigner, it's going to show up on their credit bureau, and it's also going to show up on your credit bureau. Any missed payments or late payments will show up on both the cosigner and the regular buyer's bureau, and it will affect each person's credit score individually. This is very important when you're asking someone for a cosigner to consider how close you are with that person, and do you actually need a cosigner. A cosigner can get you a significantly lower rate if they have stronger credit or better income than you. However, if things go south with the relationship between the buyer and the co-signer, it will be a very messy situation, which I've seen lots of times. So, for example, you need to ask yourself, are you going to know this person for the full length of the loan? If you're just temporarily just met your girlfriend and you've just started dating and you're not 1,000% sure you're going to stay with her for the 5-6 years that you're going to have this loan for, it might not be smart to co-sign for her. If things go south in the relationship, things are going to go south with the loan and the vehicle, and it's going to be a messy situation. However, co-signers can be positive for some young consumers, which I might recommend. For example, if you are a young adult who's applying for their first car loan and doesn't have much established credit, you might be smart to have one of your parents who trust you co-sign for the loan. This will help you achieve a much lower interest rate with your parental backing and will help you build your credit right away from when you start the loan. Now, you can use a car loan to rebuild your credit, and this is what I want to touch on and conclude on: the pros and cons of using an auto loan to rebuild your credit. There's a lot of things to consider if you want to rebuild your credit, and being here in Canada with a struggling credit score, it's very, very tough to rebuild it. A lot of times you can't get a new credit card or you can't get any other loans without having your credit built first. Car lenders, like myself, they have access to many different banks that will approve you maybe at a higher interest rate and help you rebuild your credit, unlike major banks that might approve you for a loan or a credit card. This is the positive thing and will help you rebuild your credit. An installment loan versus a credit card, which is a revolving payment, will show a fixed payment like a mortgage, and it will help you. Also, being bi-weekly payments versus monthly, I kind of call it double downing on building your credit. So you register a payment every 2 weeks as opposed to a credit card, which is a monthly payment. A credit card might also be a small amount. Your minimum payments on a credit card can be $10, $50 depending on how much you have on it. And that very slowly doesn't build your credit, or a cell phone won't build your credit very, very quickly. Yes, if you have multiple credit cards that you're not using, I would stick with that to rebuild your credit, and in time your credit score will build very quickly. If you have no credit cards at all right now or no loans and you really need a car, then using the car as a tool to rebuild your credit could be ideal for you, as long as you absolutely need that vehicle. There you have it, guys. Something a little different today from myself, Christopher, here in Cars Unlocked. If you have any questions about financing a vehicle, credit, auto loans, I would be more than happy to answer them. Subscribe to my channel and post a comment in the comment section below, and I'll make sure I answer it to the best of my ability. If you want to see more videos, informative videos like this, let me know. The 2020s are rolling in soon, so I'm going to get back to reviewing the cars outside. But if you want to see more, subscribe to my channel and let me know in the comment section. Have a great day.